This is the Real Estate Investing 365 podcast, your go-to source for real estate investing strategies so you can start living the life you want and get where you want to go. With your host, Justin Hanna.
Hey everybody, we got another episode here. Today I got my friend Bill Neville. Is that how you say your name, right, Bill?
That's right, yep.
And he's with the Entrust Group. It is a self-directed IRA trust custodian. Custodian, is that what you would say? Okay.
Custodian and record keeper is what we do.
Cool. And I think you guys are located in the Bay Area in California, but you do work all over the world, I assume.
Yep.
Okay. And so today we're going to talk about, a lot of people out there have 401ks or IRAs and stuff, and they want to get into real estate. They don't really like the stock market, kind of like myself. I like it, but I'm more interested in real estate. And so lots of people want to know how they can use their 401ks, their IRAs, and invest in real estate or other assets. It doesn't have to be real estate. It can be all kinds of different things. So,
right.
Bill, why don't you give me a little rundown of what you guys do, and then we'll dive into how we can start using that money and invest in other assets.
Right. So as you said, Entrust, we are a custodian record keeper. So what that means is that when you have a retirement account, in order for a retirement account to qualify as a retirement account, you have to have a custodian, right? And most people who have a retirement account, whether it's a 401k or an IRA or a pension plan or a 403b, 457b if you work for nonprofits or government organizations, most of the time the custodian they have is a bank or a brokerage firm, like a Charles Schwab, Merrill Lynch, Fidelity, companies like that. And those banks and brokerage firms are only willing to hold typically publicly traded stocks, bonds, and mutual funds inside the retirement account. But the IRS doesn't limit you. The IRS says you can invest in almost anything you want inside a retirement account, but the custodian you have your account with has to be willing to process and hold those investments and be the custodian of whatever asset you want to hold. And so that's what the self-directed industry is. Self-directed, I'm going to do air quotes, is not a type of account. The types of accounts are 401k, traditional IRA, SEP IRA, Roth IRA, et cetera. And so if you have an account with a self-directed custodian, essentially what that means is that you make all your own investment decisions. So unlike a Merrill Lynch or Charles Schwab, where not only do they limit you to stocks, bonds, and mutual funds, but they will also advise you. They'll have a conversation with you, find out what your risk tolerance is, what your age is, and they'll recommend certain funds to invest in or potentially certain stocks. Whereas we don't do any advising. We're not a fiduciary, so we don't recommend or promote or endorse any particular investment. It's up to the individual account holder to do their own due diligence, find the investment that they want to make, and then instruct Entrust to make that investment. And two, you can hold non-traditional assets. You're not limited to just stocks, bonds, and mutual funds. So if you want to buy an investment property, or you want to invest in a startup company, or you want to use your IRA to lend money, or precious metals, tax liens, trust deeds, I could go on and on. It's really easier to talk about what you can't invest in and what you can. But if you want to invest in something non-traditional, something other than publicly traded stocks, bonds, and mutual funds, a company like Entrust, a self-directed custodian, will process and hold that investment.
Okay, cool. Yeah, that's good to know, because I didn't even know before I talked to you the first time, really, that you can invest in gold. You said you had somebody invest in a racehorse. You can
in a racehorse and a cattle. Yeah, in a bowling alley, and an airplane. Somebody bought an airplane as an investment inside their retirement account. Yeah. Now there's rules around personal use that we can get into. That like if you buy, an airplane or a horse, it can't be for personal use. So like you buy an investment property, it can't be a property that you're going to stay in or use as a vacation home or a second home. It has to be for investment purposes only. But yeah, aside from those rules around what's called self-dealing. The only things you can't invest in while we're at it, so the only things you can't invest in are collectibles, life insurance, and S corporations. So collectibles would be like art, alcoholic beverages, that's the coin collections, I guess. Now you can own currency, like foreign currency, or you can own precious metals like gold, silver, but you can't have like a collectible. So for example, you can own an art gallery inside your IRA, but you can't own art, right? Or you can own a winery, but you can't own actual wine inside your retirement account. So aside from collectibles, life insurance, and S corporations, as long as it's for investment purposes, your IRA is allowed, and not personal use, then your IRA is allowed to invest. I say IRA, when I say IRA, that means just retirement accounts, right? It doesn't just have to be IRAs. It can be 401ks. And then we also have health savings accounts and Coverdale educational savings accounts that can be self-directed with Entrust as custodian.
Okay, so like in Entrust, for example, they're pretty much just like the buffer between that separates the person that wants to invest in their retirement account and the government. You guys are the buffer between people not colluding their funds and making sure that, I mean, we're not doing anything we're not supposed to, right? It's kind of like the separation between a regular investment account.
Right. I mean, as I mentioned when I started, in order for a retirement account to be considered a retirement account, it requires a custodian, what you refer to as a buffer. It requires a third party to hold custody of the assets, right? So you open a retirement account, you contribute cash, right? And there's, depending upon your income and the type of account, there's a maximum contribution, and at a certain age, you're allowed to start taking distributions, and with a traditional or a 401k or a SEP, it's tax deferred, right? So what you contribute, when you make the contribution, you deduct that on your taxes, it lowers your taxable income, but the custodian has to hold that cash. And then if it's a Roth and you make a post-tax contribution, it grows tax-free, but again, the custodian holds that cash. And then if you want to make an investment, you have to instruct the custodian to make that investment. Now, if you have an account with Merrill Lynch, and they may recommend, like, you invest in this Putnam fund, or, you know, or this, or you decide you want to invest in Apple stock or whatever, you may make that decision, or they may advise you to make that decision, but you still have to instruct them. You still have to say, yes, buy that fund. And typically there's probably some documented evidence that you have on file that says, like, whether you fill out a investment instruction form or something like that. So Merrill Lynch or whoever, they're the custodian, they're the buffer. In this case, Entrust is the custodian. We're the buffer that actually holds custody, and you instruct us to buy that investment, and that investment's held in the name of your retirement account. It's not held in your personal name, right? So when I make an investment, it's held in the name of with my retirement account, it's held in the name of the Entrust Group for benefit of Bill Neville account number, then my account number with Entrust. So I personally don't own that rental property. I mean, I do have a couple rental properties inside my IRA, and that's exactly who owns it, is the Entrust Group FBO, my name and account number. So it's not, honestly, when you buy a stock or mutual fund with Merrill Lynch, that stock or mutual fund is not held under your name. It's held under Merrill Lynch for benefit of your name and account number. That's kind of industry standard naming convention, right? But you don't see that because it's publicly traded. It's electronically traded, so you don't see that titling. But with alternative assets like real estate and private placements, there's usually a physical contract where you're seeing written out the name of the IRA as the buyer. And so people are usually surprised by that, but in reality, if you have a 401k with some other custodian, that mutual fund or stock is not held in your name. It's held in the name of that retirement account, right?
Yeah.
So the concept remains the same. It's just the assets that you're able to invest in is different with a self-directed custodian. There's more variety of assets. The IRS allows you to. The custodian has to also be willing to hold that investment.
Right. Yeah, I understand. And, you know, when I mail people, and I didn't know this until I spoke to you the first time, when I'm sending direct mail or I'm calling on people or whatever, I'm getting addresses from people from tax records. A lot of times I kept seeing over and over again, for instance, in Boise, where I was doing a lot of that, I kept seeing this one specific, Mountain West something, FBO, John Smith, over and over and over again. And I kept wondering, I was like, what in the world is this? And so I would mail them. And I ended up calling the company that I was mailing these to, and they said, well, they have a duty.
They're out of Utah.
Okay. Then they have the duty to forward the mail or whatever they get.
Right.
To
the account holder. Right. Yeah.
And I didn't know what that was until I spoke to you, and now that makes sense because these are all self-directed properties.
I got a little trivia about Mountain West. They started in the industry as an Entrust franchise. So the owner of our company used to have, had started sort of a franchise business where he was opening these franchise offices where these other individual business owners would be their own businesses, but they were operating under the Entrust Group, or they were Entrust Mountain West, I think was their name at the time. And then it was actually right when I started with the company. I started off as manager of franchise operations, where the owner of our company didn't want their franchise operations anymore, so he sold them all their businesses.
Oh.
So Mountain West actually was under the Entrust umbrella at one time, but now they're on. Just a little trivia
that's
for you
cool.
there. But yeah, so that's why I know them, because I know they're out of Utah. I know them because they used to be part of the Entrust family until they became their own company, and now they operate independently. But their forms and their fees and all their stuff would be very, very similar to ours, because they started in the business as an Entrust franchise. Just side note, since you mentioned Mountain West. But yeah, that's how you were seeing that, was an IRA custodian as holding title on those properties on behalf of the account holder.
Yeah, and I didn't know what that was for the longest time, and so that's good to know now. So
now you know.
Cool. Okay, so if somebody has, let's say like myself or somebody else out there, they have a 401k or they put into their own IRAs and stuff, and it's with, like me, for example, I have several different IRAs with Edward Jones. I want to get those out of there, and I want to do a self-directed account. How do I go about that process? Like, how does that work?
Yeah, you open an account with us, which is filling out an account application. Can either be done online or you fill out a form, and then you're doing a transfer. You're doing an IRA to IRA transfer. So you fill out the transfer form of the custodian who's receiving the money. So you fill out an Entrust transfer form. We would send that to Edward Jones. There's a section of the form we have to sign called a letter of acceptance. So the custodian who's receiving the money has to sign it. It's just a trustee-to-trustee transfer. You would liquidate. You're not going to transfer stocks in kind. You'd liquidate, transfer the cash. So on that transfer form, you would say you're going to transfer whatever, $50,000, whatever the dollar amount, transferred over. Now you have an IRA with Entrust, and now it's just a matter of you going and finding the investment that you want to make. And once you find it, then you have to instruct us to make the investment. We have a process for that involves a form called a bi-direction letter. So again, for audit trail purposes, we have to have documented evidence that you instructed us to make this investment. So all custodians have some process. It's all relatively similar. The forms might be a little bit different. We also have the ability to do it through our online portal, but ultimately it's open the account, fund the investment, and they each involve individual steps. But I mean, none of them, it takes 10 minutes to open an account. To transfer money from one custodian to another, it typically takes about a week, 5 to 7 business days on average. But I mean, I've seen it happen as quick as a day. And then to fund an investment, to instruct us to make an investment, our turnaround time is 2 to 3 business days typically. Depending upon what you're investing in, and that the paperwork comes to us properly filled out in the name of the IRA as the investor. And the most frequent sort of mistake that we have is people submit the investment document, like the purchase agreement for real estate. The contract comes in and it shows Justin as the buyer instead of the Entrust Group, FBO, Justin, et cetera, et cetera. So that has to go back, and we need them to fix that so it shows the IRA as the buyer. That's sort of the most frequent mistake that we see, but it's easy enough to fix. It's just changing the paperwork,
Yeah, right. So let's say somebody wanted to buy a single family house. Now, can they take a loan out with, let's say, combine a loan with their IRA amount to buy the property?
The IRA itself can borrow money. So there are financial institutions, that will lend money to the retirement account. So it's still all held inside the retirement account. So the retirement account gets the loan. Like on the loan documents, the borrower would be the Entrust Group, FBO, account holder's name and account number. And so the loan is going to the account buys the property, and then the account pays the loan back. What you're not allowed to do is you're not allowed to essentially use your IRA as collateral. So you can't take, like, let's say you want to buy property for $100,000, just to throw out a figure. You can't take like $20,000 and say, okay, my IRA is going to put down $20,000 and then go borrow the other $80,000 in your personal name. That's prohibited, right? So when you say, can you borrow money? No, you can't, but the account can borrow money, right? The retirement account can be a borrower.
Okay, so it probably can't be a standard conventional, conventional loan. It would have
20% down. Yeah,
it'd have to be like a private, like a portfolio lender, somebody that's doing a non-recourse type loan or something.
Yeah, exactly. So it's required to be non-recourse, which means that the only collateral allowed is the property itself. So you can't put up any personal guarantees or personal collateral, right? But they also can't go, if your IRA were to default, they can't go after you personally because you're not the borrower. They also can't go after any other assets in your IRA. So if you have one property and some stock, they can't go after the stock, right? Or if you have two properties and one defaults, not that anybody wants to default, but the definition of a non-recourse loan is the only recourse is the property itself. And you're right, they're probably portfolio loans. There are there's actually financial institutions, there are banks that do non-recourse loans to IRAs. We, along with I think most of our competitors, most of the companies in our space we have a list on our website of a half a dozen that we know are willing to do non-recourse loans to IRAs. Not that you're limited to those, we just, to help make the sort of the search easy if you need to borrow, your IRA needs to borrow money. But as long as the lender's willing to do a non-recourse loan and that the borrower is the IRA itself and not to the individual, I mean, well, the IRA custodian has to sign the loan documents, right? The account is the borrower, so the custodian has to review and sign those loan documents. So when somebody's using their IRA and borrowing money, the loan comes to us and we review it and we sign it, and we have to make sure that it's a non-recourse loan. If there's any wording on there that says that there's other collateral or personal guarantee or something like that, then we can't sign it and we have to reject that. Right.
No, that's good. That's another reason it's good to have like a reputable custodian like you guys yourselves, because that's you guys' main job, is to make sure, for one, the paperwork is being done correctly, and for two,
right,
you guys go over all the documents like
we've done it before.
Group. Yeah, right. You've done it before millions of times or thousands of times anyway.
Right.
So
right.
that's one reason I really like the thought of using a self-directed account. If you're going to buy into real estate, buying into like a syndication, you know what I mean? Because then
right,
you're putting in, even if you only have 50 grand, well, there's not a lot of houses you can buy for 50 grand. And if you are, that's a whole other story. But then you can just put into a fund and be, just a part owner of that fund with just
right.
50 grand, not worry about loans or anything like that.
Syndications are essentially LLCs where somebody's, like you said, putting 50 grand into like some kind of LLC where they're bringing in a bunch and maybe raising a couple $1 million and buying a massive apartment complex or something, is probably the most common investment we have. Like real estate in general, if you include syndications, real estate is definitely the most popular investment inside retirement accounts. A lot of people hold actual title on property, but a significant number of people are investing into syndication type deals. And that's, we get a lot of business from syndicators who refer people to us, who somebody wants to invest in their retirement account. So my large part of my job is establishing relationship with the people who are doing the syndicating, and so that we can be the service provider for anybody that they refer to us. But syndications aren't just real estate. I mean, there are syndications that are investing in cryptocurrency. There are syndications that are investing, I don't know if syndication is even the right technical term here, but there are funds, maybe is probably the better word, like private funds that are investing in cryptocurrencies, that are investing in the cannabis industry, that there's all kinds of syndicators, not just real estate syndicators, but syndicators that are doing notes, right? There are people where you can invest in an LLC that's turning around and lending money, right? That are being hard money lenders, and you're getting a percentage return rather than a rental income or appreciation based kind of return on investment. So there's a lot of them. Until I started with this company, I had no idea the quantity of those types of private funds, private investments that exist out there. Now, with that being said, a lot of them only accept accredited investors, and so that's going to limit, sometimes the people who can invest in them. But there are plenty who will accept non-accredited investors as well.
Yeah, and accredited investors, I think, just is being individual, $200,000 a year, or married, $300,000, or a net worth of $1 million or more. And that can always change.
With not including your primary residence, right?
Yeah.
The $1 million not including the primary residence. Yeah, and the $200,000, if I remember correctly, or $300,000, it's the last 2 years and expectation of the next year or something like that. I kind of forget exactly, but yeah, that's the gist of it. Or net worth of $1 million, not including your primary residence as part of that net worth.
Okay, cool. So let's focus in on if somebody wants to buy, let's say they have a couple $100,000 in there and they want to buy 4-unit, little fourplex building. Do they have to? Can they be the property manager on the property, or do they have to bring in another property manager, third party?
So it depends upon how you define property manager, right? So you're allowed to be, if you invest in a property inside your retirement account, you're allowed to take like responsibility for the asset, which means, you know, if you want to like advertise and show tenants, like put it on Craigslist or whatever and show tenants, if work needs to be done, like show contractors the work, you can't do the physical work yourself. What you can't do as a property manager is you can't take a compensation, right? You can't take a property management fee in order to manage a property that's held inside your retirement account. But there's no rule that says that you have to have a property manager. You're not required to. I do think that it's a good policy to do that. If you have a scenario where you have an apartment complex where managing that property is for all intents and purposes, like your IRA owns a property that for all intents and purposes managing that property or taking care of it is to a certain extent a full-time job, then that would likely be considered prohibited, right? But if it's just something where, like I said, once in a while you have to find a new tenant and show them, or you know, they call you up whenever work needs to be done and you have a plumber or a maintenance man that you call up and they go do the work, or you meet them there to show it. There's nothing that says you can't do that. You're allowed to be responsible for the asset. You're definitely in a gray area when you're managing your property, that like, at what point do you cross over from you're just being responsible for the asset to where you're taking on like really property management responsibilities where you're maybe doing something that's prohibited? I don't have a line. Like, I can't say like when you cross this line. It's
Right.
That's why we as a company just say like, you don't have to have a property manager, but it's a good practice too. Like, we encourage people to have a property manager, but you definitely can't be compensated. If you're going to manage the property, you can't take any kind of fee to do that, right? That's prohibited.
Yeah. Okay. Well, yeah, and I'm on the side. I'm in the camp that I always think you should have property manager no matter what, even if it's in your hometown. Me personally, I think it's better anyways, but for this, it would definitely, I think, be the way to go. So when let's say you hire a property manager and then expenses and utilities and things like that need to be paid. How do utility bills get paid? Do you guys every month write a utility bill check to whatever needs to be paid, or the contractor, or whatever it is? Like, how does that work?
Yeah, I mean, the account is responsible for paying any bill. So there's really a couple ways you can do it. You can send us the bill and we'll pay it outside the account. If you have a property manager and the property manager is receiving the rent and holding the rent, then you can send those bills to the property manager and the property manager pays it. Again, as long as the property manager is a non-disqualified third party, it can't be a disqualified person who's being the property manager, which is not only the account holder, but the account holder's spouse, ancestors, so parents, grandparents, et cetera, lineal descendants, so children, grandchildren, et cetera, and then spouses of lineal descendants. So I'll give you an example in mine. I mentioned I have a couple of rental properties inside my account. They're outside the Bay Area. They're in the Midwest. You jokingly talked about not being able to buy property for $50,000. Well, I would debate that, because I have a couple of those that are pretty inexpensive. But anyway, so I have property managers that are local there. And so I have the tenant, instead of sending money to the IRA, I just have them send it to the property manager, and the property manager keeps the money in an account for me. And then when I get property taxes or whatever, I send them to the property manager, and the property manager pays them. So I'm allowed to do that because the property manager is a third party. It's a non-disqualified third party. So I'm not physically touching the money. It's still like it's held in a separate account on behalf of the retirement account. So that's a way to do it. The most typical way to do it, though, is that somebody has the bills just come, or they get the bill and they send it to Entrust and instruct us to pay it. Or we have an online portal. They can do it through our online portal where they upload the bill and tell us to pay. But one or the other. You either have to have the IRA pay it directly, or if you have some third party who's holding the money on behalf of the retirement account, that third party can pay the bill. But it can't be you. You're not writing a check. You don't own the properties. Your retirement account does. So You can't pay the bill personally, right? If you don't have the money inside your retirement account to pay the bill, then you have to get more money in that retirement account, make a contribution, or have the IRA borrow money or something. But you can't just decide, well, I'm going to cover this out of my own personal savings. That's prohibited.
Right. And it's just like, it might sound more complicated because we're talking about it being in the self-directed account and everything, but it's really the same thing. If all you have to your name is 50 grand and you spend it all on buying a property, well, then if the first month comes around and there's bills that come due before you bring the rent in, well,
Get rent,
you still need extra money, right? It's the same thing.
Right.
If your retirement
Right.
account, you only have 50 grand, you need to make sure you don't spend it all, or at least have some reserves for, miscellaneous repairs that can come out of that, and to pay your property manager and pay your whatever bills you're going to have. So it's the same,
Right. Plan for that. You have to think about that, right? Yeah. You plan ahead. But I mean, if you're a real estate investor, whether it's inside a retirement account or outside a retirement account, you have to plan for that, right? You have to have a plan for in case it's not rented for a certain period of time. How are you going to cover whatever, like mortgages or utility bills or anything like that? It's really no different. You just have to plan for it. But the important thing to know is that if you don't have the money inside the retirement account to pay a bill that's come due, you have to get money in that retirement account to pay that bill. You can't just decide you're going to pay it out of pocket, right? It has to come from the retirement account. Now, there's multiple ways you can get money into the retirement account. If you have money still in a 401k or an IRA with a different custodian, you can transfer more money in. It's still an IRA, which means you can make a contribution, assuming you haven't exceeded your contribution limits. And if those two options aren't available to you, then you got to find someone who's willing to do a loan to your IRA, right? Because it's got to go into your IRA, and then the IRA pays the bill.
Okay. And then now, let's say you're getting rental income, you're getting $1,000 a month. That on your rental property, does that $1,000 a month count towards your annual limit of contribution to your IRA?
No, not at all. That's what you're getting is a return on investment, right? So return on investment can be unlimited, right? Like if you buy a property for $100,000 and you can turn around and turn it into $500,000, like you're allowed to do that. That's just a return. You just made a smart investment. No, contribution is when you're writing a check from your personal savings, into your retirement account. You're making it's based on your, you have to have earned income. And then depending upon the type of account and your income, there's maximum that you can contribute in a year. But yeah, return on investment doesn't impact at all.
Okay. And if somebody has, like for me, for example, I have like a Roth IRA and traditional IRA. Those can't be combined. It's still the same rules, right? Or can it? Or
well, they can't be combined into the same account, right? They're separate accounts with their own. I mean, you can make a contribution to both, right? You can't exceed certain contribution limits, but you can partner two accounts into one investment. So if you have a traditional and a Roth, and you want to buy a property and you want to use money from both accounts, you still have two separate accounts. You have like the Entrust Group FBO, your name and account number one, and the Entrust Group FBO and account number two, with account number one being the traditional, account number two being the Roth. You can partner those together to buy like a syndication or a property, whatever. So sorry, I got something popped up on my screen there. So you can partner, what's called partnering in our industry, where on the purchase contract and ultimately on title on that property, it can show the Entrust Group FBO, your name and account number one, as to whatever undivided interest of traditional IRA, and then the Entrust Group FBO, your Roth account number, as to an undivided interest based on the amount of money that's coming from that account. So now you have two IRAs that are partnered together. They're both owners in that property, which means that the rental income has to go to each account based on the percentage ownership that's owned by each account. Same thing with any bills like property taxes, insurance, maintenance, has to be paid from each account based on the percentage ownership, right? So yes, they're not combined into the same account, but they can be partnered together into the same investment.
Okay, yeah, that makes sense. So I think you mentioned on the phone too that you can create an LLC to buy the property, and then if you have multiple accounts, they can just be funneled through that one LLC, right? So then it's less confusing.
Yeah. I mean, you can create a thing for partnering purposes. Partnering into an LLC can have a lot of advantages, particularly if you're also going to need to borrow money, because you'll need to create a single entity as a borrower. So the LLC would become almost a requirement in order to partner as well as borrow. But where you typically see the LLC, so people who are watching and listening to this podcast, if you do any research or due diligence on self-directed IRAs, you're going to run across the term checkbook IRA or checkbook control IRA. And what is being talked about there is, instead of having your IRA invest directly in, let's say, a property, you establish an LLC. There's no custodian that's going to hand you a book of checks and say, okay, go crazy. You can write checks out of your IRA and buy whatever you want, right? There's nobody who's going to do that. But you can get checkbook control by establishing an LLC as a pass-through entity, right? And so you create the LLC, you name the IRA as the member of the LLC, and then the LLC would be the investor on title on that property. And you can be the responsible party or manager of that LLC. And again, as the manager of the LLC, you can't compensate yourself, but it gives you, you're the one who sets up the LLC, you're the one who opens the bank account, you're the one who has checkbook control on behalf of the LLC. So it becomes, like I said, a pass-through entity that gives you checkbook control. So you're allowed to do that, right? But if you're going to be partnering, let's say you want to have, you and maybe some other family members all want to invest in one property, instead of having 3 or 4 or 2 or 5 or whatever LLCs on title on the property, you can set up an LLC, have all the different investors in the LLC, and have the LLC be the single entity that's on title on the property, which means the rent gets paid to the LLC pays the bills, everything's funneling in and out of the LLC. Eventually, that money has to flow from the LLC back to the IRAs. You can't just start taking withdrawals from the LLC, because the LLC is owned by the various IRAs or the single IRAs. So eventually, it's just a pass-through entity to give checkbook control. And as we get to the start of this conversation was, if you're going to partner and you need to borrow money, right? So you're bringing money from a couple of different IRAs and you still need to borrow additional money. You're going to have to set up an LLC, because you have to create a single entity as a borrower, because a bank's not going to loan. You can't go and want to buy a property and say, well, this IRA is going to borrow 50% of the value of the property, and this other loan IRA is going to borrow the other 50%. A bank would never do that, right? So even the non-recourse lenders that we have on our list, you'd have to create an LLC as a single entity. But that's not the only time you have to create a single LLC. You can also do the LLC if you're simply looking to not have to send every bill to Entrust and have all the rent go to Entrust, but instead you want to be able to write your own checks, then you would need to set up an LLC as the pass-through entity to do that.
Right. Okay. And then somebody like Entrust, is one of the benefits you guys have is that you can call in directly to you guys and say, hey, I'm having a problem. I don't know what to do here. How do I, you guys can kind of guide and direct, how do I set up an LLC? Who can I go through to have, you won't do it for us, right? But you kind of have
We're advised, right? We won't advise, but we can certainly, I can certainly educate. I guess that's the way to put it. Yeah, I can answer questions and provide education, but when it goes over to how should I do this, it's I can't say how, I can give you advice in whether to do an LLC or not do an LLC as one example. Sometimes people ask me that. I'll be I can explain the pros and cons as I see them, but ultimately whether you should or shouldn't is a personal decision for you to make, right? Or even sometimes people want to get tax advice, right? They want to, well, should I do a SEP IRA or should I do the 401k or whatever? It's you need to talk to a CPA about that. So yes, we are definitely here to help explain the rules and what you're allowed to do and what you're not allowed to do, and give education, that type of thing. But ultimately, the decision is the individual account holders to make as far as what they're going to invest and how much they're going to invest, what type of account, et cetera, et cetera.
Okay. Now, if somebody has property in an account and then they're at the age where they can start drawing the money, they draw the money from you guys just cut them a check. The rent still has to go from the property into the account, and then you guys disperse the whatever the monthly draw to the client.
Correct. Yeah,
okay.
We're the custodian. I mean, so they still take a distribution from their account. And that, again, that's no different from us than it would be a Merrill Lynch or Charles Schwab. You have to request a distribution from your retirement account, and the custodian distributes it to you. The difference between them and us, though, is that if you want to take a distribution that has more, you want more cash than what is cash in your account, like it's easy to liquidate a fund or a stock, right? Like you can just tell Merrill Lynch and say, okay, sell like, $10,000 worth of that mutual fund, then I want to withdraw $10,000. But they can't come to Entrust and say, liquidate $10,000 worth of my property.
Yeah.
Like we have no way of doing that or no role in doing that, right? So if you have that's the thing with self-directed IRAs is that the investments tend to be less liquid, if not entirely illiquid, right? Like a syndication, you're kind of at the mercy of the syndicator as far as how liquid that's going to be, right? So if you're going to invest in something and then you reach required minimum distribution age and you want to take a cash as a distribution, like you have to figure out how to liquidate that, right? You have to find the buyer. You have to decide what you're going to do. We play no role, and we get that sometimes. People call us up, and particularly when it's a beneficiary account, right? When we get like a spouse, for example, and their spouse opened an account and bought like a syndication investment, and then like they die, and then the beneficiary says, hey, I want to liquidate that. And it's like, go ahead.
Yeah.
I mean, you have to find the buyer. Like we play no role in that. They interpret it like the same way you would a publicly traded stock, bond, or mutual fund, where you just go and place it on the market and buy and sell it at a certain price. We didn't help you buy it. We're not going to help you sell it, right? It's up to you to find. But I mean, typically, like in that case, you'd reach out to the syndicator and see if you can sell it back to them. And
yeah.
but I mean, I sort of went in a different direction. But yeah, I mean, ultimately, if you want to take all the rules are the same around when you can take a distribution. If there's a penalty prior to age 59 and a half, age 70 and a half, you're required to take distributions. Like, again, it's still an IRA. All those rules are the same. Mm-hmm. But it's up to you as the account holder to request that distribution and tell us how much you want to have distributed to you. Nothing happens automatically.
Yeah. Okay. And I think you probably already touched on this, and everybody should know, but you could even, buy and sell properties in your IRA like multiple times, right? As long as
sure,
money, you can get loans, and if you have enough money
fix
in there
and flip.
to fix up the property, you can flip it. And
yeah.
Really, like the standard, 6% return you're getting on stuff in certain other investment accounts or whatever it is, like you could have a huge return on this. There's no limited side. Like you said, that's just your return and your good investment or bad investment.
If you're good at it.
Yeah.
Yeah. If you're good at it, absolutely. Now, depending upon how many fix and flips you're doing in a year, the IRS might perceive you that you're in effect running a flipping business inside your retirement account, and you could be subject to, your account could be subject to what's called unrelated business income tax, UBIT. So that could incur an expense associated with that. But the concept still remains the same. Yeah, you can, when you buy a property inside your retirement account and then you turn around and sell it inside the retirement account, everything happened inside this tax sheltered entity. So most people think, oh, well, I bought an investment property. If I don't want to pay tax, I have to do a 1031 exchange. That's only when that's outside the account. When you do it inside the retirement account, 1031 exchange is not applicable because there's no tax consequences to it. The account bought the investment, the account sells the investment, any return on investment stayed inside the account. It's sheltered by the fact that it was done inside a retirement account. So you don't have to, you just grew your account, hopefully, right? And if you can continue to do that, yeah, you can have unlimited return on investment. Like if you, look, that's famously, Mitt Romney made a ton of money inside his Roth IRA. Because he invested into Bain Capital did some investments through Bain inside his retirement account that he took like a relatively smaller amount of money and turned it into a significant amount of money. And it all occurred inside because it was a self-directed retirement account. Now, because he is who he is, he didn't have the account with like an Entrust Group. He he got special service with probably a Merrill Lynch or some company like that. But the fact remains is that he did it because he had a self-directed account. He didn't have a traditional account that was holding publicly traded stocks, bonds, and mutual funds. He held private investments, and he took a relatively small amount of money and turned it into relatively, in the grand scheme of like maybe really, really big money to you and me, but relatively compared to what it turned into after he completed his investment. And there was a lot of news about that when he was running for president. It was a self-directed retirement account that he had. We got business. Like, people called up and said, hey, I heard, about this self-directed, Mitt Romney, blah, blah, blah. Like, it increased exposure in our industry whenever all that, sort of made the press and was big news when he was running for president.
Yeah, dang, I didn't know that, and that's good to know. But talking about that, when it does get out there and more people are talking about it, how does somebody go about finding like a good, reputable trust company or holding company to work with? Like, what are some things they should look for?
I mean, we have websites. I mean, I've seen articles where people have listed, like Bigger Pockets as one example. Like, there's oftentimes articles or like, Bigger Pockets works, where they have some kind of like threads and stuff like that where people talk. And people will every once in a while go on there and ask who's a good self-directed IRA company, and people go on there and respond. I mean, we've been in business for coming up on 39 years, right? I mean, this is not a new thing. We have other competitors that have been in the business for 20, 30 years. Like, this is not all of a sudden that, like, we started doing this in the last couple of years. This has gone on for a long time. Ever since ERISA went into effect in the mid-1970s, you've been allowed to invest in things other than just stocks, bonds, and mutual funds. But traditional brokerage firms, the Merrill Lynch's and Charles Schwab's of the world, sort of co-opted the retirement account industry. And so for that reason, most people think that's the only thing you can invest in. But this has always been allowed. So in terms of, make sure that there's a history and websites and like all this stuff that I think any business that you're looking to do business with, like any of that kind of due diligence you would want to do. But again, like, we've been in business for 38 years, and there's and I don't want to like give the impression like we're the only one that's been around we have competitors that have been around for 25, 30, well. So there's a lot of us. We're a niche industry to some extent. So when I say a lot, there's a few dozen companies in the industry. Some are a lot newer than the others, but this has been an industry, a business that's been going on for a long time, where there's enough companies out there that it shouldn't be hard to find, someone that you're comfortable with and that has a good reputation, has been around for a while.
Yeah, no, definitely makes sense. And you had said something before too, where one thing you guys do is you have, like, you, for example, is our regional manager there's
Right.
4 of you guys, like regional managers, and under each one of you have assistants or something that is actually there to help and walk people through the process. Is that true?
Yes. A single point of contact is what we describe it. So with our company, anybody who opens an account, I'm a business development manager, and then there are 3 of us, and we each have associates. And so you're assigned a single point of contact. So you're assigned a business development manager as your point of contact when you have an account with us. Or if you come from one of my referral partners, so you could be outside my region but referred by one of the referral partners, one of the syndicators or fund companies that I've established a relationship with. And because I have a relationship with the fund company, then you become, my account. And so my job is to try and like bring in business, right? And really largely it's based around educating people about self-directed IRAs. But I also have a certain account management responsibility that anybody does have an account. They're, if they have any questions, they have my direct contact info. But my associate handles most of that. But we do differentiate ourselves from our competitors that way. And that, I mean, most, if not, I want to say most of our competitors, once you have an account opened, if you have questions, you're going to call an 800 number and get like somebody in customer service. And with Entrust, we have a client services group, but you also have your business development manager's contact information, email, and phone number, so you don't have to go through an 800 number. You can just reach out to them directly, and that's part of our business model and how we try and differentiate ourselves and provide hopefully particularly strong client service experience.
Right. Okay. That's cool. And then one thing we didn't touch on yet is like the fees, like the fee structure. How do you guys get paid?
Yeah.
How's that look?
Yeah. We all charge, since we're not selling any investments, there's no like commission, right? When you have a account with a brokerage firm and you're buying funds and things like that, they're going to take a commission. There's what are called 12B1 fees or something like that, where you get a certain percentage that get withdrawn on an annual basis. But since we're not selling you any investments, we don't have a commission, so we just charge transaction and record keeping fees. So $50 it typically costs to open an account with us. Although I often waive that whenever people, like when I do presentations, or in this case, for anybody who sees this podcast, if they want to open the account, and they can just reach out to me and we'll waive that fee, for watching this podcast. Then we have a transaction fee for an investment, which is either $95 if it's non-real estate, so like an LLC or syndication would be considered non-real estate, or $175 if it's real estate. So Entrust has to process an investment. So any investment documents, like if you're buying a property, the contract and all the closing documents have to come to Entrust, and we have to process that. We have to review those documents. We have to sign those. So we charge $175, or if it's an LLC, there's going to be a subscription or operating agreement. We have to review and sign. It's $95. So that's a one-time fee. And then we have an annual record-keeping fee where we have two choices, either a fixed per asset fee or we have a variable fee based on the value of the account. The variable fee can be as low as $199 a year. The flat per asset fee is $299 a year. So if you buy a property and the property is worth $50,000 or $1 million, it's still one asset. It's a flat fee. It's $299 a year for that one asset. But if you have a fairly low dollar amount, if you want to invest, let's say $20,000 in something, then you would choose the fee based on the value, and then that fee would be $199 a year.
Okay, cool. Yeah, it's so much simpler than trying to ask your, Fidelity or something about all the fees and all this stuff. It's like, okay, well, this is this and this is this, and give you a whole page full of breakdowns.
And the other thing is that you can pay like our transaction and record keeping fees from outside the account. You could pay them by credit card. So if you have money inside a retirement account and you're investing in mutual funds, they just take those fees out of your return, right? Like you pay like that 1 or 2%. Instead of getting a 10% return or an 8% return on your investment, you get a 7 or 6% return because they just automatically withdraw that out, which means your account has to pay those fees. But your account doesn't have to pay those fees. You're allowed to pay those fees from outside the account. So if you want to keep all your retirement account money in your account and pay our $299 every year, just pay it on a credit card, right? And that way you can keep all the retirement account money inside the retirement account and continue to grow it. So that's another sort of little twist that people don't think about.
Yeah, no, that's I would never thought even to ask that. So that's good that you brought that up.
I mean, not that $300 a year is like all the money in the world or anything like that, but
No, but it's cool. You get a couple of little points on your credit card for it, and then it doesn't take away from your investment.
Get point. You used to be able to deduct those on your taxes and as a miscellaneous expense up until the most recent tax change. That was also a tax write-off, but that went away.
It went away. So
maybe it'll come back someday.
Lots of good things happen, but some goofy things too. Well, Bill, thanks for being here. I hope a lot of people learned a lot more about this. I sure know I did with our first call and then even this call too. So where can people learn more about you, contact you or the Entrust Group, and get started with the Selfdirected account?
Yeah, I mean, we have a website, which is entrustgroup.com, entrustgroup.com. And I'm on there. If you look, contact us, and my information is there. My email is my first initial, my last name, so B Neville, B as in Bill, N as in Nancy, E, V, I, L as in Larry, L as in Larry, E, at entrustgroup.com. And then my phone number, if anybody wants to call, is 510-587-0950, and my extension is 237. But, I mean, go to our website. We have a ton of information. We have a learning center on there that has all kinds of not just information about self-directed IRAs, but educational information about alternative assets like tax liens and trust deeds. And we do webinars on a monthly basis. We bring in guest speakers sometimes that, like, we've got about investing in real estate. We did one recently just where we had one of the lenders who do non-recourse loans. We had him on as a guest to just simply talk about non-recourse loans and what they look for when they qualify an IRA and just things like that. So please make heavy use of our website. There's a lot of good information on there. And you can open an account directly online through the portal. Although to waive the $50 fee, you'd have to reach out to me so I can give you our a promotion code to be able to waive that fee.
Cool. Right on. Well, I appreciate it. You obviously know what you're talking about, because there was tons of things I wanted to ask, but in your answers, you would just keep answering the questions that I had next. So you definitely know what you're talking about. And
this is all I do all day long is get people who call up and say, hey, like, what's this and how does this work and what this? So yeah, this is what I do all day long.
Perfect. Well, Bill, appreciate you being here. Thanks a lot. I hope some people reach out to you, and I'll be in touch soon. I appreciate it. Have a good day.
All right, Justin. Thanks.
Thanks.